The Central Bank of Nigeria is scheduled to hold its Monetary Policy Committee meeting next week. There, we expect rate decisions to be made. Also, the Nigerian stock market had experienced a seesaw November. There's been a day of upside, another day of downside. The Nigerian stock market on a single trading session lost 4.6 trillion naira because of the concerns over the capital gain tax reforms introduced by the government. Also, coming up next week, we expect the Debt Management Office to issue bonds, 7-year and 10-year instruments. We also anticipate central bank actions in the market, given to the heightened level of liquidity in the market. So today we'll be talking about all these and what you should expect from the MPC meeting that's going to be holding next week, and what you should be looking out for in the Nigerian stock market in the week ahead. So I'm delighted today to be joined by my friend Oladipo Ajayi. So Oladipo Ajayi is the head of fixed income at Chapel Hill Denham. Dipo is the vice president. He's a go-to person when it comes to analyzing and talking about the Nigerian capital markets. Dipo, welcome to The Edge, and nice to have you chat this afternoon.
Yeah, good day, Tony. Thank you very much for having me once again on The Edge.
Right. How's the week been for you?
Well, it's been a great week because it was a week that had the ups and downs. We noticed that on the bond side, the market was a bit bearish, and on the automobile side, it was a bit bullish. And don't forget that currently we don't have a regime where there's a lot of liquidity in the system, and that's actually spurring a lot of activity in the fixed income space, and majorly on the treasury side. Last week, the Apex Bank was in the market twice, conducting OMO auction to actually reduce the level of liquidity in the system. And we opened the week with over 4 trillion. And the Apex Bank will be able to actually mop north of 3 trillion from the system. And also last week, there was coupon payment for the May 2023 bond. And that also helped the level of liquidity in the system. And also last week, there was also OMO maturity of north of 1 trillion. And that led to reinvestment goal for most portfolio managers that actually had this liquidity sitting in their book. And but despite this, we noticed that on the bond side, the yield actually went up, and this could be attributed to the action of the DMO releasing new calendar for the remainder of the year. At the beginning of the quarter, the DMO released calendar showing that they will likely be borrowing around about 200 monthly, and so market has actually factored that in. That so a lot of people were already storing instruments, knowing fully well that by the end of the year, there's every tendency that the DMO will likely reduce the level of allocation. But it was surprising when the DMO came to the market and introduced another calendar for the remainder of the year, where it was actually stated that we'll likely be seeing close to about 500. And that's actually led to markets actually selling down. A lot of people are selling so as to actually buy back at the auction, and also some traders are also shorting the market so as to cover their position when maybe at the auction, and that's exactly what happened generally yesterday, last week rather. And on the equity side also, we noticed a bit of sell down on some names. And upper week, we saw that it was more like a dark week for Nigerian equity market. And
Yeah, I was going to ask you, is it in any way related to the new calendar that was issued? I know that prior to now, the Nigerian stock market has experienced a turbulent November, following a series of, you can list them, the capital gain tax reform. Uh, then I understand that November really has been a loss-making month for the Nigerian stock market for the last 27 years. November has always reached the all-share index has always returned a negative value for the month of November. So is there any correlation with this, or it's just the market having its way?
I think the what happened in the month of November is fundamental driven. I don't think it was as a result of precedents, because in the month of November, one of the key things was it started with the pronouncement by the President of the United States. That actually created a bit of panic in the market. And also, to calm it up was the fact that a lot of these foreign guys, they needed clarity around the capital gains tax. Like you mentioned, a lot of them were actually sitting, thinking before the end of the year, the government will come to actually really clarify how or the implementation of the capital gains tax. But because there was no clarity, a lot of them decided to actually fly to safety first, and we noticed that initial sell down.
Yeah, I was saying that.
What happened was
get the clarification
immediately after.
But that came
just
later.
A day later.
Yes. Yeah, go ahead.
No, the market was actually trading positive. The market was trading positive before these two incidents happened. Before the pronouncement by the US president, before the issue of the capital gains tax, the market was already in positive terrain for the months. But immediately these things were done. Of course, initially, market started to assume it as profit taking at the beginning. But after some time, it now became clear that most of these foreign guys were trying to exit the market, trying to fly to safety first until when there's clarity around what's happening in the market. Of course, some days later, we saw improved demand in the market, and most of these instruments actually improved in valuation. Zenith traded as low as 53.60, but before the end of that week, it closed around 63. We saw Nigerian breweries also trade in that direction. Access Bank traded as low as 1990, but by the end of that week, it closed at 23 naira. So that can give you a sense of that of how market reacted. It was more like a panic action, and but the contrarians in the market saw it as an opportunity to actually position, and that's exactly what happened in that side of the market. But for last week, it was more like a quiet week where people were just trying to position around the remainder of the year.
Okay, makes sense. So let's talk about, because I think whatever happens at the auction that we talked about, which is tomorrow, that might have implications for the stock market as well. So where do you see these? Where do you see the stop rate for the bonds on offer?
I think the rate will likely stop around 1570 levels. And my view is premised on the fact that the instrument is trading around that corridor in secondary market. And considering the volume that is being offered, of course, most traders and portfolio managers will likely want to get a better return than what the secondary market is currently giving. And so I think the rates will actually close around 1570 corridor.
Okay, even with the fact that we anticipate about 500 billion.
Yeah, of course. Like I mentioned earlier on, the Lagos State government was in the market up last week, and they were able to actually issue over 200 billion worth of bonds, and it closed around for the generic bond, it closed around 1625 for a 10-year instrument, and the green bond closed at 16%. And so, if the Lagos State can raise funds around that level, I won't be surprised if the federal government is actually raising funds around 1570 level. So I think that's where the instrument will likely close.
Around 1570 levels. We'll see how
Yeah.
it pans out later. So, I mean, if you're watching this, you can let us know what your expectations of the auction will be. Please put that in the comment section. And if you happen to, get it right, we'll give you a shout out next week when we meet again. So thank you for providing that background, Tipo. So let's talk about how this might impact the stock market now. So if the bonds close around 1570, would that be a positive sentiment? Would that be like a positive sentiment towards the stock market? For instance, some of these banks that have been under pressure, are we going to see like demand for those stocks?
Well, for me, I think it's more like a different time totally for some of these instruments. Currently, a lot of portfolio managers are just trying to actually lock in the fixed income space, knowing fully well that the 15% levels will soon be something of history, because you expect that there will likely be rate cuts. And when there is rate cuts, it simply means that yield will further drop. So a lot of them are actually trying to capitalize on that currently. And so what we are doing, I will likely see that actually affect the activity in the equity space. We have the PFAs that play in both markets. And currently, they rather want to play more in the fixed income space than equity space currently. And but for me, I think that the best time for anyone to actually want to lock in the equity market is now. There are a lot of good names in the market. You see names like Aradel, you see names like Seplat, MTN, Airtel, the banking space. You see names like Zenith, GT. When you look at the cement space, you see WAPO, you see Dangote Cement, and the like. So there are a lot of names in the market that are currently on the cards. And I feel that the best time for anyone who want to lock in into these values now. Because when you wait until when rates actually now drop in the fixed income market, as at that time, of course, it will be a time where everybody is now running to buy, and that will not be the best time for you to actually lock in. It's time as an investor, you must be able to actually lock in ahead of the market. And that's one of the reasons why I feel that normally the equity market should actually witness a lot of patronage this week. But because of the auction that's currently going on, we'll likely see a lot of activity on the bond side because of auction. Because, of course, the DMO will be in the market tomorrow, and they will likely float instruments for people to actually bid and actually subscribe. So we'll likely see most of the portfolio manager, PFAs, actually participating in the banks will also be there to also participate. And also we will also see a lot of brokers also participating in this market. And don't forget that the week of bond auction, we tend to see more like the first 2 days as a bit quiet.
Yeah,
and also that also coincide with the MPC meeting, which normally on MPC meeting week, we normally see the Monday as a very quiet day. And we don't likely see any activity until Wednesday when I would have seen clarity by Tuesday. So I feel that this week, one way or the other, it will be a lot of upside, up and down. But I think that we'll see a lot of portfolio manager cherry picking the both markets.
Yeah, I mean, I was going to take. I mean, I don't have to, say this to you because you were vast in the market. You know it that whenever there's an auction that coincides with the MPC, is usually like a wait and see approach. So after the auction, and most of the time we get the results on Monday, then the MPC provides the outcome on Tuesday. So everyone will be like waiting to see what the outcome of the MPC will look like. And that would definitely dictate the direction the market will move for the rest of the week. But I don't know, that there have been obviously huge demand for the uh, Nigerian bonds. Are we seeing that same demand for our Eurobonds? What can you make of the level of demand in that space?
Well, I think I will take a cue from our last Eurobond auction, where Nigeria was trying to raise about 2.125 billion dollars, and we ended up taking about 2.3 billion, and the total subscription was not of 13 billion. So the bid cover ratio was close to about 5% of five ratio five rather. And also, post auction, we've seen a lot of activities on some of these instruments. When you look at the 2046 maturity, the instrument has actually gained about 5% from the last auction till now in the secondary market. And they are also still very much in high demand. And after the auction, the last rating agency, which is S&P, also came to the market to actually improve our ratings. Which which was now more like in line with the other two rating agencies, and that this, you know what this means to the market. When you have a better rating, of course, it means that you should have a better valuation, and that's exactly what we'll be seeing in the market. So across Nigeria, Eurobond curve, we'll be seeing aggressive demand. The short dated instruments are currently trading around 6% currently as we speak. And when you look at the long end of the curve, and when you start looking at 2049, of course, where 2049, 2051, these instruments are currently still trading at single digits as we speak currently. So the era of double digits for Nigerian Eurobond is gone. So it means that kudos to those who actually locked in when the market was actually presenting double digits. As we speak currently, Nigeria sovereigns are actually on high demand as we speak currently in the market.
I mean, I agree with you. We've both been there, done that. We were obviously we had opportunities to buy some of these Euro bonds for some of the corporates when they were upper. Maybe some of them traded as high as 20s sometimes ago.
Yeah,
and
yeah.
Now they are all in single digits. So it's really an opportunity for anyone looking to lock into the high yield. So the last Euro bond, we had I think about 9.13% for the longest tenor that was issued. So that's a decent return on the USD, if you ask me. Now, one other thing that I was tracking during the week, inflation declined, I think, to about 16.1 or thereabouts. I know there's still more room for that to go down. Obviously, this would impact the level of subscription for the bond in the bond market, as you mentioned. It's going to dictate what people what investors would be looking at. And I also imagine that this would also influence the CBN's Monetary Policy Committee meeting holding on Monday. What do you make of all this? Do you think this will really be the motivation for the CBN to go hot the monetary policy rate?
Well, for me, I think I'm expecting nothing less than 100 basis point rate cut. And one of the reasons why I feel
Isn't,
that the central
isn't
bank
that
will actually
bullish?
show the line.
Isn't that
Uh,
bullish?
that is not bullish. I'm sure by the time I explain now, you actually likely want to toe my line. As at the time the last rate cut was done in the month of September, inflation was 20% over 20%. Between September and now, we have shed about 400 basis points. So it means that even if the central bank or the monetary policy guy will not take the full length of that 400 basis point, they can actually do 25% of that, which is around 100 basis points. And that's I also even think the 100 basis points is actually still very much conservative. Because when you look at where we are currently coming from, when you look at where um, monetary policy rates currently sitting, it's sitting in the region of 27%, and inflation is already 16%. So, what reasons why are we still keeping the monetary policy rates at that high level when inflation
Yeah,
is over
I
a
can
thousand
I
one
can
hundred
give you
basis points
I
from
can
it?
give you a reason. We want the naira to stabilize. So because of that, we want to maintain a high level of interest rate to keep
And
pressure.
that's exactly what we have done, and we have actually achieved results. Currently, our reserve is over $46 billion as you speak currently. Naira is stable. When you look at the way Naira is trading, in more like that in the at the FM market. Of course, Naira is allowed to trade freely without any intrusion from the central bank in that market. And also, when you look at the fact that uh, the rate at which monetary policy rate is what banks use in actually determining the cost of actually giving out loans. And of course, if you go to any bank now, of course, they'll still be pointing towards around 30% to actually give out loan to users or people that actually need to actually borrow from the banks. And don't forget that where the real interest rate is currently is around where you can actually trade instruments. And that's around the corridor of 16% thereabout. But despite the fact that rates or overnight rates or whatever rates, placement and all those things are actually trading sub 20%. Admin monetary policy rates are around 27% region is still too high for us. So I think that bringing it down a bit would know to a great extent what will be more like a win-win for the market. There's a way that you can drop rate, but you can still ensure that the market is not awash with liquidity. You control the level of liquidity in the market. That one way or the other will help to actually keep investments or return on investment at an attractive level. Rate is currently at 27 corridor, but return on investment, a 2053 bond, which is more like close to about 28 years, that is currently trading at 14.5% in the market. A 10-year bond is currently trading around 1560 levels in the market. But yet, the monetary policy rate is well over 20 or 27%. So it doesn't make sense when you look at that. And I think we need to find a way to actually reconcile that so that we can have it. I understand the fact that, you want to keep investments rates attractive to actually attract investors. But don't also forget that there are other ways to actually do that. You can ensure that the market's not what with liquidity, and one way or the other, that will help to actually keep rates at a reasonable level. So for me, I think that having 100 basis points will still, for me, I think it's still dovish.
Yeah, I agree with you that it's time that the central bank reduce the interest rate. For me, at 27 levels and yield levels around 16%, maintaining it at that 27% level seems academic to me. Doesn't look like there is a sync with the current realities in the market. But I know there are arguments for FX stability, tightening inflation. But you also need to look at the other end of supporting economic activity. So if the monetary policy rate is at 27, which is you for a blue chip company, that is where they would expect to be able to borrow money from any bank if they want a loan. So you can imagine what the SMEs would be going through trying to get credit this time. So you are obviously holding out for a 100 basis point reduction in the monetary policy rate. Do you expect any other tweaks in addition to reduction in the anchor rate?
I don't think I expect any other thing. One of the reasons is the fact that the market's already awash with liquidity. So there's no reason to actually tweak the CRR to actually further push liquidity in the system. So I think currently the central bank can just to actually handle what's happening on the policy rate and actually leave other side of the markets open. When you see currently where the corridor is, and that's one of the reasons why you see that despite the level of liquidity in the system, the OPR rate is currently cannot actually go below 24.5% because of the corridor. And also, when you look at overnight rates, despite the fact that sometimes we open with 6 trillion, overnight rate will still trade around 24.8, 24.85 levels. So for me, I still feel that these are elevated levels, and they are not totally good for even for funding bank deficit. So I think that if the central bank needs to actually do any other thing beyond the policy rate, they may likely also tweak the corridor a bit so as to actually give room for rates to actually drop back in the interbank market.
Now, let's talk about how this might impact the naira. I think the naira traded at about 1,450 or thereabouts. How would CBN or the MPC reducing interest rate? How would it strengthen or weaken the naira? Because we also have to look at that angle as well.
So I think it's going to be based on the quantum of reduction. 100 basis point, 200 basis point will not likely affect so much. And like I mentioned earlier on, and which you actually alluded to, that when you look at where the current policy rate is in comparison to where return on instruments are currently in the market, of course, it looks like more like academic exercise. And so I think that you can actually drop the monetary policy rate and also ensure that you keep the current return in the market at this level. And but another thing also that we also need to do is that for how long will you continue to keep rate at this level? Next year, Q1, Nigeria will likely be relisted to the JP Morgan index, and so which means that our market will be further open to international community. At that particular point in time, you cannot hold rates. We know what actually happened when we were actually initially listed on this index. Rates actually traded as low as 10%. And that's one of the reasons why I feel that rates at 15 or not of 15% now is more like a very good one for anyone looking to actually take advantage of the market. Because by next year, you may not likely see these levels. Again, next year, January, the government is looking to actually kickstart the new tax regime. What it will mean that the government will not likely be advised. Simply also means that which further lead to a drop in yield. So I think that considering where we are currently, we need to find a way to actually balance our holding rate and also impacting the economy overall. The currency is to a great extent stable, and also the policy that is being adopted by the current central regime looks more like the one that is attractive to international community. And the government can continue to issue bills just to actually ensure that they actually continue to attract investors in that segment of the market, while they are actually allowing market to trade appropriately at the other segment of the market. We've seen a time in question, I think sometimes this year, where the difference between where OMO rate and the NCB rate was trading is close to about 600 to 800 basis points. And so it simply means that because each of these markets cater for different investors, and the OMO market is more like to actually attract a foreign investor that don't currently have that confidence, full confidence in the market. And sincerely, currently, we've been seeing a lot of investors coming to the bond space now. We've been seeing a lot of inflow of investment into the bond space now as well, which simply means that a lot of them too now have the confidence that even with your 15.5% for a 10-year bond, it makes a lot of sense to them, because they feel that currently, if the government continue what they are doing and we continue on this trajectory, there's every tendency that the decision will be one of the best decisions they have taken.
Yeah, I think the JP Morgan coming back into the market would be a huge win for the market. You mentioned the yield levels of 10%. Have you forgotten we had bonds trading around 4%? We had NTB below 1% at the time. So that's going to be a massive boost to the Nigerian capital market. So really kind of reinforce what you've been saying earlier, that it's a good time to buy. And you also alluded to the fact that you've already seen investors maybe front loading their demands ahead of a possible comeback for the JP Morgan into the Nigerian bond space. So as we begin to wind up, I'd like to get your investment ideas for this week. We'll talk about bonds that you might be, if there are any particular bonds across the yield curve that you think make sense for investors to be looking at this week. And I also get your equities. You also give us an idea of what we should be looking at in the equity space. If you can give us some names as well, that would also make sense. And
well, I think on the bond side, considering that it's an auction week, and I'd say that it's a monetary policy committee decision week, I will say that the best option for anyone is to actually partake in the forthcoming bond auction. Rates will likely close. Wherever rates close, we trade from there. When rates close around 15.8, you're very good. You can start trading from 15.8. Imagine you actually get to buy at 15.8, and on Tuesday, the decision of the policy guide is to actually reduce rate by 200 basis points. It's pretty clear that
that's not your prediction. You are looking
my prediction was that I said minimum of 100.
Okay.
And that's why I said my 100 basis points is dovish, meaning that at least 100 basis points.
Okay.
Because we have headroom to actually, and that's why I was saying that we have close to 400 basis points to play with. Even if we decide to just take only 25% of that will be just 100 basis points. And so I feel that imagine you sitting on position on Monday at 1580, and then on Tuesday, a decision was that there was a rate cut between maybe 100 basis points to 200 basis points. Of course, market will react to that, and in no time we'll start seeing ourselves trading around the 15% corridor, which is not out of place, because before the introduction of this.
Yeah, not too far from where market is now. I think we were trading at that level earlier in the week.
Yeah, that's exactly what I'm saying. Exactly. Before the new calendar was released, of course, we were trading around that. So it means that assuming new calendar was not released, there's every tendency that by now we may likely be getting closer to around 15% or trading sub 15%. Like I mentioned 2 weeks ago, at the 2053, 2050, they were trading around 15.3. As you speak currently, they are being offered in the market at 14.5. And don't forget that the last time we have a long-dated instrument being issued by the DMO was 2023. That was about 2 years ago. So it simply means that the market is actually yearning for long-dated instruments. So because of that, we've been seeing aggressive demand on the long end of that curve. And the holders of these instruments too, they are not the ones that want to sell. PFA will not want to sell. Insurance companies don't sell their long-dated instrument. They will likely hold it to maturity. And that's exactly what we're seeing. So we feel that the belly of the curve, one way or the other, will actually hold that line. And that's why I feel that at any point in time, the mid-tenor instruments are the best option for anyone who wants to trade currently. Instruments like 29, 30, 31, 32, 33, 34, they are very good instruments. They are currently trading north of 15 up. And if you can actually get to buy instrument around 15 up now, I'm sure by the beginning of January, you will thank me because of where we'll be trading by then. Because imagine inflation continuing in this direction. Maybe in the month of November, we'll see another 100 basis point drop from inflation. Maybe December, because of the popularity of December, market inch up a bit. By the time we get to January, we'll likely see ourselves actually seeing inflation around maybe 14 or even lower than 14%. And the target of the monetary policy guy, basically the central bank, is to move inflation back to single digits. And when inflation go back to single digits, so where do we expect some of these instruments to trade?
I think we are not actually far from that. At 16.1 now, if we continue on this trajectory, maybe before the, let's say, fourth quarter, we might be close to maybe 13, 14% level on inflation, which is going to be a massive boost for the economy. Yeah, I was asking you, what are you looking at in the equities market this week? You already talked about some, I think you mentioned Zenith Bank. I seem to like that as well. You mentioned Access Bank at 23. You mentioned Aradel. So if you are going to be giving out stock picks now, what are the stocks that you are looking at this week?
Well, for me, I will pick MTN. I'll pick MTN. MTN is currently minting money. Of course, they declared dividend of 5 naira, and which is an interim dividend. And by the close of the year, they will likely declare final dividend as well, which I think that will likely be in the region of maybe about 300% of what they declare as interim dividend. MTN is currently trading around 450 handle. And for me, I feel that MTN is not a bad bet. When you look at the top line, they're actually printing money heavily on the top line. And they've been able to actually work around their negative shareholders fund, considering the level of return that MTN has posted this year. So it means that holding MTN in your portfolio will not be a bad idea. Zenith is also another one. And when you look at the banking space, we like Zenith, we like GT as well. GT more on the corporate governance front. Don't forget, GT is actually listed on Dual Estate, on LSC, and also on the NGX. So it simply means that there's a lot of transparency in that segment as well. And also, when you look at names like Aradel, like I mentioned, Aradel is a good name. When you look at the level of acquisition that Aradel has been doing in the last month, is an instrument that someone needs to actually hold in your portfolio. And what comes to mind when I remember Aradel was just that about 3 years ago or about 2 years ago thereabouts, Seplat was trading around 900 naira, and someone was talking about buying. Let's buy Seplat. And currently, Seplat is over 5,000 naira now. So how can you reconcile?
Seplat dropped to about 600 or 400 at a time, and then began to go back up. Yeah, I mean, I agree with you that really some of these stocks, it's a time to really invest in those names. My final question.
And most of these names, they're actually heavily underpriced.
Okay. Yeah, my final question to you.
So most of these names, they are heavily Yeah.
Yeah, my final question is, at least it's clear to everyone, the crypto market is crashing. A lot of, young guys are heavily invested. a lot of young guys are heavily invested in that market. That market obviously has burnt a lot of people's fingers, so to say. So are you seeing people moving away from that market now into like a mainstream bonds, equities, and all that? Is that a sense of things that you've been seeing recently? Because I don't see so much of those hype about, come and invest in this crypto and all that with, the amount of losses people are printing in the crypto market.
Well, majority of those that play in that segment of the market, they are the young traders, young investors. A lot of them don't have good understanding of what the traditional markets are actually bring to the table. Most of them just feel that crypto, of course, is the buy and sell. And most investors in that segment, they are more like bandwagon. What are we buying? What are you buying? How do I invest? And a lot of them don't have good understanding of how the markets play. And maybe because of their age, they can easily take risk in that level. And but I think that the older people will rather play in more like an equity market or fixed income market. And you get to a level where you switch your risk fully. Yeah, when you are getting to your late 40s, you start moving into more like conservative investment, like a bond, where you know that there's constant cash flow. You are not open, you are not exposed to volatility. Imagine those people that locked into FGM bond in January at 22%, and you have bought, you have FGM bond 22% in your portfolio, maybe a 10-year bond in your portfolio. And of course, it gives you an idea of the level of cash flow that you will print annually from that market. And also on the equity front as well, like I mentioned, I think we need to educate people more on the opportunity that they're actually missing in the equity market. I was discussing with someone that the level of return we have seen in this market this year is actually alarming, and the mind sometimes will not conceive it. And when you look at names like Better Glass gained over 600% at the time this year. And you look at
I was looking at that earlier. That's actually crazy. Even looking at the all share index itself, I think we were north of maybe
40%.
Yeah. Before we then
not of 40.
Lost some grounds and then brought back to about 41 or 40% of So look at that alone. If you have an index tracking the all share index and you just invest in that alone,
and you have
40% return.
That means you printed 40% return in this year alone.
40% return, and you're not carrying the risk that we're currently seeing. I mean, I think you also witnessed the AI revaluation issues and all that. That's what have been leading to the correction of the US market.
The market.
Nvidia came out, surprised investors, beats estimate, but that was not enough. After about one or two trading sessions, the stock market, went back down. So it's really it's really a good time to watch out for some of these good names and then invest in them. I think, Dipo, it's been a wonderful evening again, chatting about the Nigerian stock market, the fixed income space. We'll be back next weekend to really talk more about the outcome of the MPC and what has done, the bond market and what we might have seen in the bond market. So really, I want to thank you for, coming to do this with me again today. Thank you so much, Dipo. And
thank you very much. Thank you very much for having me today.
Yeah, thank you everyone for joining us today. If you have any questions, please leave them in the comment section and consider subscribing, like, and share this video. Thank you and bye.